Hello, I'm Eric Kane, the Director of ESG Research for Bloomberg Intelligence, and for this month's ESG News Bulletin, we'll focus on two key areas. First, we'll discuss what the U.S. election could mean for key ESG issues, and second, we'll discuss COP29 and some key developments that came out of the annual climate summit. I'll then be joined by Christy Ayala, an ESG specialist with enterprise data sales, who will walk through Bloomberg's GOVS function, which allows users to assess countries and regions based on key climate metrics. So in early November, Donald Trump was reelected, and questions emerged immediately about what this would mean for ESG. While many of these questions will be answered over time, there are certainly some changes that appear to be inevitable. For example, we expect the current pause that has been put on the SEC's climate disclosure rule to become an indefinite pause. As a reminder, the rule would have required companies to disclose information on material climate-related risks, board oversight of climate, Scope 1 and 2 emissions disclosures for large filers where material, and much more. The rule was paused in April due to several legal challenges. Further, the SEC's human capital disclosure rules and ESG fund label rules are unlikely to come to fruition under a Trump administration. Questions continue to circulate around the fate of the Inflation Reduction Act as well, and we believe certain elements are likely to be withdrawn, such as the waste emissions charge that was established to penalize oil and gas producers that fail to curtail their methane emissions. The fees were to start at $900 per metric ton for emissions released in 2024 and increase to $1,500 per metric ton for 2026's emissions. An analysis by Geofinancial Analytics indicated that the rule could have cost the top 25 producers more than $1 billion in total in 2020. Of course, BI's upstream oil and gas intensity tracker provides a great view into current and projected methane intensity for U.S. and global producers. Trump is also expected to remove tax credits for electric vehicles and erase tailpipe emissions rules established under the Biden administration. These actions would go against lobbying from the auto industry that seeks to preserve the rules which are designed to compel the industry to sell more EVs. The BI ESG team has research and data to help investors understand which companies are leading in the transition to EV. Of course, these are just a few of the issues that could be impacted by the Trump administration, and the BI ESG team will of course continue to publish research on the implications of future regulations on companies and industries, as well as on investment themes. And as we record this news bulletin, COP29 is down to its final stages in Baku, Azerbaijan. While we are unable to report on a final deal, there were several interesting developments and announcements that came out of the annual climate summit. Day one of the negotiations saw a breakthrough with countries agreeing on rules for a United Nations administered global carbon market. The rules, which are referred to as Article 6.4, had been blocked in recent years due to disagreements over the integrity of carbon credits and how to verify the associated emissions reductions. Proponents of the rule argue that the market will unlock billions in financing for emissions reductions projects in the developing world. At the time of recording, negotiators were yet to agree on Article 6.2, which sets the framework for bilateral carbon credit trades. Second, more than 30 countries that are collectively responsible for 50% of global methane emissions from organic waste made commitments to reduce these emissions. These countries endorsed the COP29 Declaration on Reducing Methane from Organic Waste and pledged to include specific targets related to the waste sector in their future nationally determined contributions, or NDCs. Several country-specific announcements followed, such as the United Kingdom reaffirming its goal to eliminate biodegradable waste from landfills by 2025. In the final stages of the summit, negotiators were working on an agreement that would provide funding to developing countries to deal with damage from climate change and to further adapt to these changes. Vulnerable nations were seeking $1.3 trillion annually by 2035, while developed nations appeared to be willing to only commit to $250 billion annually. Other areas of debate included whether countries such as China, which are considered emerging, should contribute given their overall and current contributions to total greenhouse gas emissions. The close of COP29 will be followed by a February 2025 deadline for signatories to the Paris Agreement to update their nationally determined contributions, or NDCs, which outline how countries intend to reduce their greenhouse gas emissions and adapt to climate change. Speaking of NDCs, I'll now turn over to Christy Ayala to walk through Bloomberg's GOVS function, which allows users to assess these commitments and much more.
My name is Christy Ayala, and I'm an ESG data specialist within enterprise data sales at Bloomberg. Many investors are looking to understand the energy transition profile of a country, under the premise that climate policies and pledges can change the financial risk profile of assets, industries, sectors, and economies. Government actions will influence markets around the world, from advanced and developed economies to emerging and frontier markets. The same way investors need to understand a company's commitment to reduce emissions, they also want to understand how governments are performing as well. Using research conducted by Bloomberg NEF and their Climate Scope project, Bloomberg developed government climate scores, which enable investors to analyze more than 130 countries on their current and forward-looking carbon emissions, power transition performance, and climate policies. Investors can use this data to decarbonize their sovereign debt or multi-asset portfolios. Here we have a U.S. Treasury loaded on the GOVS screen. It provides you with the government climate score for the U.S. Bloomberg's methodology provides quantitative data across 3 pillars. The first section is the carbon transition. You can see on the screen there is a backward and a forward-looking view of a country's carbon emissions by comparing a country's historical emissions to the country's nationally determined contributions, or NDCs. This is essentially the country's climate pledge. We then compare where the country needs to go based on the Network for Greening the Financial System, or NGFS scenarios for 2030. The second section analyzes the power sector transition of the country. Here we evaluate the current energy mix of a country with a forward view based on new projects and expansions of renewables. Third, there is the analysis of a country's climate policies. This measures a country's power sector policies, providing insight into the commitment of a country to the energy transition. Moving to the Scores tab on this screen, we will be able to take a closer look at the granularity of the data used for the scoring, the weights applied, as well as the performance of the U.S. versus a peer group. Here you can see we are comparing the U.S. to other G7 countries. You can change the countries you are using for comparison in the drop-down at the top. Within each section of this screen, you can drill down into the input data used in the analysis. Focusing on the power sector transition, it is important to note that this data is sourced from the Bloomberg NEF Climate Scope project and it is proprietary to Bloomberg. Bloomberg NEF's bottom-up approach of conducting research provides very detailed data on the existing power sector in each country, as well as the new capacity additions for wind and solar, as well as coal plants. It also provides the calculated percentage of renewables that will make up the energy mix of the country by 2030, which is very useful in understanding the country's alignment with meeting targets by 2030, and therefore sovereign debt in a portfolio. Drilling into the climate policy section, this also uses the research from Bloomberg NEF's Climate Scope project and provides insight into what target, if any, is set, whether it is legislated, announced, or other status, regional net zero data, as well as any green bond issuance to finance the energy transition. This data provides clear indications of the country's actions, or lack thereof, to support their net zero targets and energy transition. It will be interesting to see how the U.S. data may change with the change in administration. Lastly, on the CO2 emissions tab, you can do a more detailed comparison of the U.S. versus the G7 countries, seeing the actual numbers as well as the world rankings for the country being viewed. You can access this content at GOVS Go. Thank you. Eric, I'll send it back to you.
Thanks, Christy. And as a reminder to our viewers, more data and research related to these topics and much more can of course be found on Terminal by going to BI/ESG Go. Thanks for joining us, and please note that we will not produce an ESG News Bulletin in December, but we'll look forward to seeing you in the new year.